Alright, y'all, today we are going to be going through the step-by-step guide to finding the perfect trade setups. This is the official step-by-step guide where I will be walking you through the exact strategy that I use to take a short from right here, take a long from right here, take a short from right here, take a long from right here, take a short from right here, take a long from right here, and then very much so recently I have just taken a short from right up here. Okay, now as you can see, these trades are very accurate. I'm longing the top and the bottom, and just to show that these are actual trades I have taken, these are trade setups that I have given in advance in my VIP Discord. I give the trade setup in advance before we hit that area, and then the trade actually, when it does play out, you can see we keep track of it in the VIP Discord, and you can see the entries and the take profits that I have hit over here for all of these trades right here. So everything is out in the open, guys. This is not me blowing smoke up your patootie. These are actual trades I have taken, and I'm going to walk you through exactly how I was able to take them. And if you follow this strategy, I do believe you will be able to have very similar experiences. Of course, none of this is trading advice, but if this is something you're into, make sure to like the video and make sure to subscribe to the channel, because we absolutely do go over the juiciest Bitcoin and cryptocurrency trading and technical analysis type stuff. All right, so this is the official step-by-step guide. Okay, step number one is we have to mark key levels on our chart. A lot of people, when they get into trading, they don't want to mark key levels. In fact, I would have to say that this is the bedrock and the foundation of my trading. If I don't have a level on a chart, I do not have any structure from which I can trade from. When we think about investing of any kind, what we need to learn to do, no matter what capacity we're trading at, we need to buy low and sell high. And what marking key levels on a chart does is it gives us market structure, and it gives us reference points from which we can identify highs and lows. And so, for example, we can just see right here in this little chunk of price action that we've been trading in for, wow, I guess since the 21st of January is currently February 1st, we can see that we have a very clearly defined high right here and a very clearly defined low right down here. And then we have a middle point right in here, and we can kind of see that price action respects these levels, right? You don't have to be a rocket scientist, okay? You don't have to be a virologist in order to mark these levels on your chart. Anybody can look and see we have a pretty clear high right here. We have a pretty clear low right here. We have a pretty clear center point right here. And we can see price really does respect these levels, right? When we come to the low, we get bounces. When we come to the middle point, we find resistance. When we come to the high, we find resistance. Back to the middle point for a bounce. Back to the high for a rejection. Back to the middle point for a bounce. Back to the high for a rejection. Then we break down and lose that area of consolidation, and we come into a new one where we have a very clear high, a very clear low, and a very clear middle point. In fact, even before, and this is super important, guys, even before we even see all this price action play out here, right? After the dump, it's still abundantly clear that we have formed a very clear low. We have a very clear high and a very clear center point right here. And that's usually the case, right? Before we actually do get the whole range, we can see we have a clear high, we have a clear middle, and a clear low. And then the more that the price action unfolds, the more clear these levels become. And the reason I'm harping on this so much is because market structure is the bedrock of your trading. Because again, how are we going to buy high and sell low and have a good entry if we don't know what low and high is, okay? And so the best way that I recommend marking these levels on your chart is, one, you can do it as simply as I just did. You can literally just look at the chart and do it as simply as I just did. But what I really do recommend is you learn some kind of technical analysis. Now, for me, when I am doing technical analysis, what I do is I will mark out my plans, let's say, for that day, for a specific chart. Okay, so for example, this morning I was looking for this specific trade setup on Solana, where we were coming up to the top of a channel where we had an intersection with the golden pocket, okay? And so I marked this as a very key high, and I was doing it more with just my eye. I'm using more technical tools. I'm using Fibonacci, I'm using channels and stuff like that, okay? So that's a key level, and that short did actually, I did actually take that short. It was pretty juicy. We came down a little bit more than this. I hit 2 nice take profits on it, and I have exited that trade now. But this is how we're going to do it. Or another good example, in the Bitcoin Scalp Trade channel, just recently, the most recent Bitcoin long that I took, which was this one right here, okay? We wanted to come down to this point of control, this golden pocket, and that was a key low on the chart. And of course, that trade worked out very, very well. I don't really have any pictures of the trade after I longed it, but that is the long trade from right down here, because we wrote it all the way up. And so I'm marking key levels on the chart. This is the foundation for my trading. You would never know that you'd be looking for a long right here unless you knew that this was a key level. Now, if this is something that you don't know, and this is something that you want to learn in more depth, you can check out my course at jasoncaspertrading.com. This course will go over and teach you and equip you with the knowledge and the skills and the mindset that you need to become a confident, profitable trader, where you will learn how to read the charts and feel confident in your entries. Not only that, but you will learn how to read the charts and feel confident in your trades. Take emotion out of the process, how to utilize tested trading strategies that have been proven profitable, as well as mindset and risk management so that you don't blow your account. I've had people take this course and they have gone from a losing trader to a full-time professional trader. Obviously, this is not financial advice and for demo trading, paper trading only. But if you want to get that education, there's a 20% discount in the description. You can check it out. These are all the things that you will learn here. So that is the first thing you need to do. You need to learn how to mark a level on your chart. Learn some dang technical analysis. All right, this is the bedrock of trading, learning how to analyze a chart. I mean, currently the short that I'm in right now, like literally right now, I'm in a short from right up here, okay? Because of technical analysis, guys. Because of technical analysis, we were able to identify that level and take the short, okay? So if you don't know how to do that, you can learn for free on the internet. You can check out my course, whatever. Now, after you mark a level, you need to promise yourself that you will not even consider entering a trade unless price comes to that level, okay? So I know I'm going slow if you already kind of know this, but here's what we need to do. We need to come to the charts. We need to mark out clear lows, mark out very clear highs, and then we need to tell ourselves, I am not even going to think about entering a trade until price comes to the level that I have painstakingly calculated through my technical analysis, okay? So, for example, the trade that I entered from down here, that was a trade, that was a level that I knew was extremely juicy. Why? Because it was actually a high volume node right here. And not only that, but if we pull the Fibonacci retracement tool from the swing low to the swing high, it is also the golden pocket retracement. And so I know this is a very significant low. If there's going to be a good move for Bitcoin, it's very probable that it's going to happen at this swing low. And so if I see Bitcoin starting to pump from right here, I'm not going to FOMO into a long because I already know that I'm waiting for price to come to a level. Now, if I had a level here, then I would enter a trade. But we're not talking about entering a trade, period. We're talking about how to find the perfect trade setups. Because I was able to actually long this literally right from the bottom, or even this trade down here, longing it literally from the bottom. If we go over to the setup that was originally given here, this was a very, very key level that we were looking at down here, where we had 2 point of controls, potentially putting in a higher low on a macro time frame to potentially enter a swing trade on the bottom of this downtrend, okay? And so we are waiting for these very key levels, and we need to promise ourselves, okay? Do not even consider taking a trade unless price comes to your level. Now, when price does come to your level, this is very important because a lot of people get trigger shy. They're like, Jason, you know, I see price coming to my level, but I don't know whether or not to take a trade. Because the truth is, when price is coming down and dumping, right, it can be scary to enter a long. All right, let's take a look at what I saw when I entered my long from down here. Okay, what did I see? I saw this. Doesn't look very bullish, right? Most people are scared because we had this pump, we had a massive rejection, and they're like, I don't know where Bitcoin is going to stop. Okay, so what we're going to do now is we're going to walk you through the process of the things you need to decide in your mind and come to a decision on before you even enter a trade. So when price comes to your level, by the way, if you do want to get into this VIP Discord where I post daily technical analysis updates as well as trade setups, you can go to patreon.com/Jason Gasper. We have a thriving community of traders in here posting the juiciest technical analysis, potential trade setups, whole bunch of different things in here. You could check it out at patreon.com/Jason Gasper. It's a great community if you want to learn. Now, when price comes to that level, you need to immediately have a bias, okay? If price comes down to a level of support, you need to immediately get bullish. If price comes up to a level of resistance, you need to immediately get bearish. People are always like, Jason, I get trigger shy. This is what you have to do. If price comes to one of your levels and the level is a support, meaning price has come down, dumped down to a level of support, you need to immediately have a bullish bias and start looking for a long. And on the contrary, all right, if price comes up to a level of resistance, like it did right here for the short that I'm in right now, you need to be biased looking for a short trade. Now, it doesn't mean you're going to immediately take the trade. It just means you have to have that bias. You have to start looking. You have to go on the hunt. You have to start sniffing. I'm sniffing for shorts. I'm sniffing for longs. You know what I'm saying? You got to do that. It's very important. So, once we have done all this, now it gets to the fun part. We are going to be looking at the higher term time frames. And we're going to take the bias that we already have and see if it holds up to scrutiny. We're going to take our claim and we're going to take it to trading court. We're going to stand before that judge and we're going to present the evidence. The evidence of either price is going to dump from a resistance, pump from a support, or either blast through that resistance or lose the support. Because when price comes down to your level, okay, like it did right here, there's a good chance that it might just go right? So now what we have to do is we have to use our indicators to determine if price is actually going to get a bounce from that support. We have to use our indicators to determine, is price going to get a rejection from this resistance, or is it going to keep going? And so I like to start on the higher term time frames. I'm talking about the 1 to 4 hour time frame. What we have to do is we have to determine the direction that the market looks like it wants to go on the higher term time frames and take a tally of Market Cipher B. Now, I use an indicator called Market Cipher B, and the reason I like Market Cipher B so much is because there's multiple things on this oscillator that tell you what price wants to do. Now, this is not the McDonald's or the RSI. This contains many powerful indicators together that will tell you what price is looking like it wants to do. Okay? Now, I like to start on the 4 hour and work my way down to the 1 hour. And when I'm looking at Market Cipher B, I tally it up into 3 sections. All right? So, there are 3 main things I look at on Market Cipher B, actually 4, but on the higher time frames, I'm only looking at 3. And the first thing I'm actually looking at is going to be, let me turn off the RSIs for now, are these momentum waves. Okay? I want to see, is Bitcoin, or whatever asset I'm trading, forming a top on the 4 hour time frame or a bottom? A top or a bottom. Now, why is this so significant? Because this oscillator on the 4 hour time frame, when it is coming down and starting to curve around, okay, this is telling us that we are bottoming out. And there's going to be a movement to the upside soon. And on the other side of that Bitcoin, if we come and we're printing a curve on the top, this is telling us that we are going to top out soon and form a local top and come down to the bottom. So when we come down to an area of support, for example, the first long trade that I took from right down here, okay, first of all, we go to our Discord, what were we looking for? And sorry if you guys hear crazy noises in the house right now, but you know what? It is what it is, guys. You know, it is what it is. I live in a crazy house. This is the trade that we took right here. Extremely juicy. All right, here's the original setup. Where's the original setup? Right here. I was originally looking for price to come down to that exact level. These were the 3 long trades I was looking to take. Okay, so I had my level. When we get down there, what do we see on the 4-hour time frame? We see that the 4-hour time frame is bottoming out. Okay, we see that the 4-hour time frame is bottoming out. Now, there are multiple things we should be looking at, and I'm going to get into that more later. But right away, we can clearly see as price is coming down to the level that the 4-hour time frame is starting to bottom out. Okay, now if we go back in time and see what we were seeing as we came down to the level, we can see that it didn't necessarily look like it was printing a bottom yet, but we could see the potential was there. And this is why we don't rely on the 4-hour time frame alone. After that, we go to the 2-hour time frame, and on the 2-hour time frame, what do we see? We see the 2-hour time frame really looking like it could print a bottom at any moment. Then we go to the 1-hour time frame. And what do we see? Now on the 1-hour time frame, it becomes abundantly clear that as we are coming down to our level, we can see that the momentum waves are starting to curve. And if we wait one more candle until we actually are touching that level, okay, as we are coming down and touching and bouncing off the level, market Cipher B on the 1-hour time frame is literally curving around, about to print that bottom as we touch the exact level to the dollar. Okay? Now, what we need to do here is we need to tally up on the 4-hour, the 2-hour, and the 1-hour time frame the bullish things versus the bearish things. And the 3 things that we're really going to be looking at are, okay, momentum, money flow, and the momentum waves, the money flow, and the VWAP. And then in parentheses, we're going to put divergences because these are very powerful. Momentum is what I just showed you. We're looking to see if these blue waves are topping out or bottoming out. Money flow is the next thing that is extremely powerful. Money flow is this stuff here, okay? If we see we are coming down to a support and the momentum waves are bottoming or topping out, we're coming to a level and the momentum is showing us we're going to have some kind of movement. Now we're going to take a look at the money flow. Okay, if the money flow is going in the direction that we want to trade in, for example, we can see that the 4-hour money flow is getting higher as the price is getting lower. Now, not only that, but locally here, as price is making a local lower low, the money flow is also making a higher low. We come down to the 2-hour, and what do we see? We see the money flow getting higher as the price is getting lower to our level. Now remember, I was talking about having a bias. When price comes to your level, you have to have a bias. So I'm already biased. I'm already sniffing for a long here. I'm already sniffing for a long. And remember, I'm taking my hypothesis, all right, my bias to court. And we're presenting the evidence. My claim is that price is going to get a bounce here. And then market Cipher B is going to be the judge to tell me, is there evidence for my claim? All right? So I'm going to be looking at the momentum. I want to see it bottoming out, or at least looking like it could bottom out soon. Then I want to look at the money flow and see, is the money flow going in the direction that I want to trade as price is coming down to my level. We see it on the 4-hour, we see it on the 2-hour, we see it on the 1-hour. Very clearly, money flow is coming up as price is coming to our level. This is such a powerful indicator, guys. The money flow is super powerful. Okay? And then what we want to do is we want to take a look at the VWAP on market Cipher B. Okay, the VWAP is this yellow wave. I don't know if it's a VWAP or not. Some people say it's not a VWAP. I say, who the heck cares what it is? I don't care. All I know is that it's a nice indicator to kind of help get into trades. So we're going to start in the 4-hour, and what we want to see is we want to see the VWAP making higher lows as price comes to our level. Then we want to go to the 2-hour, and we want to see the VWAP also making higher lows as price comes to our level. We want to go to the 1-hour, and we want to see the same thing. We want to see that VWAP coming up over time as the price is coming to our level. And we can see that on all 3 of those time frames it is. Now the last thing we need to look at are divergences. Divergences are a super powerful piece of evidence showing you that the price is going to go in your direction. So what is a divergence? A lot of people don't know. A lot of people get confused. You're in for a treat today because we're going to be going over exactly what a divergence is. A divergence is when momentum on market Cipher B and price are doing the opposite thing. Now, a divergence is true with the momentum waves, the money flow, and the VWAP. So the more divergences you see, the better. If you come to the 4-hour time frame and you see that price is making a lower low, you can see we made a low, we made a lower high, we made a lower low to a key support where we're already biased for a long. Then we see this. Okay, we see that market Cipher B on the 4-hour time frame is printing a higher momentum wave than the previous momentum wave. So price is making lower lows and momentum is making higher lows. This is called a bullish divergence, where we have a really deep momentum wave on the left and then a not so deep momentum wave on the right. Okay, and what we can do is we can go ahead and turn off market Cipher B and notice that this looks like a pair of glutes. It looks like a butt, okay? It looks like an uneven pair of butt cheeks. Where you have the juicy butter cheek on the left, it's nice and big, nice and round, and the ravioli is flowing out of it, and the Parmesan cheese and the tomato sauce and the meatballs are coming out of the butt cheek. And then over here on the right, you have that skinny old lady at the diner with a Brooklyn accent who smokes too much, you know what I mean? And she's like, "Hey, Dolores, get over here. This guy needs another cup of coffee, all right? He needs another cup of coffee." Why does he need another cup of coffee? I'll tell you why. Because coffee's got caffeine in it, all right? And when you got the skinny old butt cheek on the right, followed by that big old plump butt cheek on the left, we need to get caffeinated because caffeine makes you high, all right? It's a socially acceptable drug, all right? It's going to pump that price up. You know what I'm saying? And so that's exactly what we're going to be looking for. If you see that on the 4-hour time frame, immediately, you should be very biased for the direction that you're looking to trade in. Now, we are going to take a tally. What does that mean? We're going to be looking at the three things, okay? Momentum, money flow, and VWAP. And we are going to literally, you can do this in your head, but we're going to say 4-hour, we're going to say 2-hour, and we're going to say 1 hour, okay? And we are going to give these scores, okay? Either 1 out of 3, a 2 out of 3, or a 3 out of 3 for the direction that we want to trade. So we're going to take our bias and now look at the evidence on these higher time frames. Now on the 4-hour time frame, we clearly have bullish divergence in the momentum waves, bullish divergence in the money flow, bullish divergence in the VWAP. Okay, so this is super bullish. We're going to go ahead and give this actually. What happened to my notepad? Here we go. We're actually going to go give this a, because technically there's 4 things, right? We're really just looking for these 3 things potentially, but now because we have the divergences, the bullish divergence, we could say 4 out of 4 things are bullish. All right, then we go down to the 2-hour time frame, and we can also see that we're getting a bullish divergence here, and money flow is coming up, and the thing is bottoming out. Let's say we don't see this thing bottoming out yet. We wouldn't consider that bottomed out yet. So we would just come over here at the 2-hour. 3 out of 4 things are bullish. And then we come over to the 1 hour. And what do we see? We see clearly we have a bullish divergence here. Money flow is coming up. And we're bottoming out for sure. And let's say that you don't consider this a bullish divergence on the VWAP because you're only considering it from here to here. And it's getting lower. So we'll say 3 out of 4 things are bullish right here. Okay? We're being conservative. 3 out of 4 things. Okay, so we have 16 things in all. Okay, and 10 out of 16, wait a second, that's not true. We have 12 things in all, and 10 out of 12 things are bullish. So we have a score of 10 out of 12. Okay, I would say that anything above 6 out of 12 is good, and 8 out of 12 to be safe. Okay, 6 out of 12 is acceptable. I would make it more than 50%. So let's say 7 out of 12 is acceptable, 8 out of 12 is preferred, 10 out of 12 is great, and 12 out of 12 is perfect. So now the higher time frame has a total score of 10 out of 12 being bullish, okay? So we're adding all these things up, and really we can divide 10 by 12, which will give us the, I guess, 5 out of 6, or 2.5 out of 3. I don't know. I suck at math, guys. I dropped out of high school, okay? Totally dropped out of high school, which is why this is not financial advice at all. But this score, we are going to use this now as evidence to add to our case for a specific bias. So remember, price comes to our level, we have a bias. Now we look at the evidence on the higher time frames and we come up with a score. Now we're adding to our bias, all right? We have gone to the court, okay? We presented our case to the judge. We say, Judge, all right, I think price is going to go up because whenever I talk to a law enforcement or anybody in charge or anything like that, I always use this voice, all right? Get pulled over by a cop. Howdy, cop. How's it going, sir? Why pull me over today? All right? And we're saying, Judge, look, I really think that price is going to go up here, and now I have this evidence, all right? But we don't have enough evidence yet. Now what we need to do is take the bias we have, and through the lenses of our bias, right? Everybody has a bias in life. People look at everything and interpret everything through their worldview, all right? Everything they see, everything they hear, they interpret it through their worldview. Well, we need to develop a chart view, a Bitcoin price action view, and interpret everything now through it. So we have all this evidence saying we're going to get a bounce from right down here, okay? And so now we're going to go to those lower time frames, okay? Now we're going to look at the lower time frames and do the same thing we did on the higher time frames on the lower time frames, and we are going to then, taking the bias we already have, determine, are we going to make the decision to enter the trade or not? Now, a lot of people flop and grope because they don't understand how to look at market cipher across multiple time frames. Now, the strategy I'm showing you now is how to trade in a sideways market. Okay, this is not swing trading. If you want to learn how to swing trade, if you want to learn how to scalp, I have complete swing trade and scalp tutorials in the course. In fact, I just uploaded a whole bunch of new content to the course right here, going over risk management and mindset, but we do have complete swing trading tutorials, complete scalping and day trading tutorials, risk management, all this good stuff in here. You can check it out, guys. 20% discount in the description. But this is really for, trading on a day time frame and lower, okay? This is not for like weekly time frame stuff. So, now that we have this bias on the 4 to 1 hour time frame, I like to go down to the lower time frames. Now, what are the lower time frames? I like to use the 24-minute, the 12-minute, the 6-minute, the 3-minute, and the 1-minute. 24, 12, 6, 3, 1. 24, 12, 6, 3, and 1. 24, 12, 6, 3, and 1. 24, 12, 6, 3, and 1. Why those numbers? I like them. I guarantee in the comments people are going to say, but Jason, why do you use the 24-minute instead of the 30-minute? Why do you use the 12-minute instead of the 15-minute? Guys, I found that these time frames are much more accurate. I don't know why. Again, I'm retarded, even though that's politically incorrect to say. I dropped out of high school. I don't know a thing about anything, guys. I do not know a thing about anything. But I have found over the years of trading that the multiples of 6 somehow, or things that are divisible by 60, do you say divisible by 60? No. That you can divide 60 by to get a whole number. See how retarded I am? I found that anything that's somehow related to the number 6 or 60 works better, and I think it's because the hour is divided up into 60 minutes per hour, okay? So, the 24-minute time frame, what do we see as we come down here, okay? Again, we want to gather our evidence. What do we see as we come down here? Are we bottoming out? The answer is yes, okay? Are we getting money flow coming up? The answer is yes. From this point over here to this point over here, we can see the purple money flow is in fact coming up, okay? Is the VWAP coming up? Yes. So you can say that we have 3 out of 4 things for the 24-minute, okay? We don't have a divergence, but definitely 3 out of 4. We go to the 12-minute. What do we see on the 12-minute? 12-minute, we literally see 4 out of 4, okay? We see bullish divergence, okay? We see the uneven butt cheeks right there staring us in the face on the 12-minute. We see money flow coming up. We see the VWAP coming up. We come down to the 6-minute. What do we see? We see bullish divergences. We see money flow coming up. We see the VWAP getting higher as we come down to our level 4 out of 4. We go to the 3-minute. What do we see? Again, 4 out of 4. Even on the 1-minute, what do we see? 4 out of 4. It is the perfect entry. This is the perfect entry, the most perfect entry you could ever get. Okay? So now we have to make a decision. We tally up everything. Both the time frames are 10 out of 12. Okay? That gives us a total score of 20 out of 24. Okay? We have a total score of 20 out of 24. That's a perfect score. That equals 10 out of 12, 5 out of 6, 2.5 out of 3. And you know, you could just keep dividing that thing down as low as you want, man. Go crazy with it, okay? Go crazy with it. Okay? Go crazy. So now what we have to do, now that we have our score, is we make the decision based on our evidence. And the evidence is cumulative. Remember, we start with the level, and we have our bias from the level. I have a hair on my tongue there. We have a bias from our level. Then we go to the higher term time frames. We get a bias for the environment that we're working in, right? The higher term time frames are to determine the environment. You could see this on the 1 minute time frame and still crash down much slower because the higher term time frames, the environment that you're trading in, is in a massive downtrend, and the 4 hour is about to top out and print a giant red bearish divergence that's going to take us down to Sheol or Tartarus. All right? And so now through the lens of the level and the higher time frames, we're going to look at the lower time frames and get our final evidence, and then we make the decision. Now, the decision should be very easy. It should be based on your evidence. And this is the part where people start to flop and grope, because they don't have the right psychology to enter a trade and stick to their decision. Now's the time where you enter the trade and don't think about it, okay? Don't think about it. What I like to do is I like to use proper risk management, which is very important, and a very loose stop loss. What that means is I calculate my leverage and my position size so that in the worst case scenario, I am not losing more than 0.5 to 2% of my total trading capital. Now, if you wait for the perfect entries going through this whole process, you are going to have a very high win rate. I win between 7 to 8 out of 10 trades that I take because I follow this strategy as best I can. Which means even if I'm taking a loss, it's usually only a 0.5 to 1.5 on average % loss out of my total trading account. Now, because we are finding such good entries, these trades have very good risk to reward ratios. But what you need to do is you need to enter the trade, and it says to put the stop loss above or below the last swing. Basically, what you do, what's best, what I have found works best, is you give yourself some playing room here, all right? You really have to. I oftentimes don't even use a stop loss. If I have these confirmations, I will give myself a very loose stop loss. I will use a percentage of my account so that I can have like a 1.5 to 2% even playing room here before I even have to worry about getting wicked out. Because what happens a lot is people enter a trade with a tight stop loss, it goes their way a little bit, it wicks them out a little bit, and then they're out of the trade and then it pumps, right? You want to avoid that. The reason we just went through all this evidence is so that we can be confident in our entry, okay? So start with the stop loss a little looser. This is not financial advice in any way. I don't even trade real money. Paper trader only. This is what I look like. High school dropout saying that I'm retarded. Don't listen to a thing that I say. You will lose all your Bitcoin, all your Ethereum, all your fiat currency. You're going to get pulled over by a cop and get a way too expensive ticket. You're going to lose the ticket. Forget about the ticket. You're not going to pay the ticket. You're going to get more fines in the mail. It's not going to be fun. Remember this face if you think this is financial advice, because this will be forever burned into your mind and stand as a testimony against your foolishness if you think this is financial advice. But here's the thing. After you hit take profit 1, then you move the stop loss to the entry. So what I like to do is I like to, after I hit take profit 1, which if it's this much confirmation, I like to wait for like a 1 to 2% move. Let's say it's a 1% move. You take profit 1, 25% out of the trade, and then you move the stop loss either to your entry or literally directly under that last swing low. Because if we have 1% move and then we put in a lower low, you need to get out of the trade because we're not in an uptrend. We're in a downtrend, all right? And so either at your entry or right below that last wick, this will keep your wins big and your losses small. And then you do the exact same thing here, guys, for shorting, all right? If you are looking to enter into a short trade like what I did here, again, I had my level marked. On the 4-hour time frame, we're about to print a top. On the 2-hour time frame, about to print a top. And by the way, bearish divergences. 1-hour time frame as well, bearish divergences, printing a top. 24-minute and down, printing tops, bearish divergences, money flow coming down. I enter the trade. That is how you're going to do it, guys. If you enjoyed this video, make sure to like the video. Make sure to subscribe to the channel. God bless all of you. In the name of Jesus the Messiah, I hope you got something out of this video. Peace.